See if you see me there.
So
Okay.
you're live on YouTube. Oh, I'm dropping off. All right.
Oh, okay, okay. All right, guys. This is Vinney Chopra and my co-host Beau Eckstein. We will be coming live to you, right on YouTube and Facebook and all the different
See
channels.
if you see me there.
Oh, there
So
we
you're live on
go.
YouTube. Oh, I'm
Okay.
dropping off. All right.
Huh?
Oh,
Sure.
okay, okay. All right,
No
guys.
problem.
This is Vinney Chopra
Where is
and
my
my
buddy?
co-host Beau
Beau is
Eckstein.
also coming
We will
in.
be coming live to you,
So
right on
how come,
YouTube and
Beau, I cannot
Facebook
see
and all
you?
the different
Let's see.
channels.
I'm there. You just got to change the change the
Okay.
gallery view.
Sure. Okay.
Oh, okay. Alrighty. Oh boy, what's going on?
You just
These are the bloopers from Vinney Chopra, guys. I'm sorry. So I'll just go back to Zoom. There we are. Are we live? Yeah, we are live. Yeah, yeah, yeah. We are. Look at that. Vinny's like a kid.
Yes,
Just
yes.
love. You make the lemonade out of lemon, right? Hey, we're gonna put a little vodka in it. No, not this early in the morning. But Bo, so good to have you, buddy. This morning, I think we are live now. And guys, we did move from StreamYard. We've been coming for over, like I was doing it before, Bo, and then we joined hands together. So this is a show will be coming live to you all across the USA, across the world. Actually, a lot of people even join us across the world, across the globe. And it's a show for you. It's a show about real estate, commercial real estate. It's about syndication. It's about attitude. It's about personal development. And it's about loans because my buddy, my co-host, Bo Eckstein is number one, loan broker. He's got all kinds of programs. And I do the syndication. I wrote the book also, Syndication Made Easy, Apartment Syndication Made Easy. Second book I wrote was Positivity Brings Profitability. The third book we are writing, co-authoring, is going to be investing in senior living made easy. So all those great things will be coming. We also have other podcasts. Bo has his podcast, which is beautiful. Bo, and then I have my other two, three podcasts. So Bo, welcome, buddy. Kind of share with our audience. Some of you probably might be looking at and meeting us. You can chat with us also, and you can even share your ideas with us, and we'll be bringing new guests.
All
Bo,
right.
but
Good.
yeah.
Well, yeah, I heard you closed on one of your dispositions yesterday, and I'd love to dive into that today because that was a great one, and I think people out there love to hear some wins right all around, and that was definitely a win for you. And then also a recap of your symposium you did last weekend, how that went, and find out some details on that. And other than that, it's another beautiful Friday. We're going to be at 89 degrees here in Las Vegas today. So I'm excited for a weekend. My desk is stacked with loan files, having meetings with people, helping people. I got a guy today that's an acquaintance of mine, actually a friend now that I met, and he's buying a business, and he had all these SBA questions. So, just a fulfilling day so far. And I'm looking forward to diving in with you, Vinny. And so
Awesome.
so talk to us about your recent sale. When you
I
bought the
love to.
property,
Yeah,
how you ended up selling it, and what it looks like for your investors.
love to, Bo. Again, this is the property. I did very big research in 2016. That's about 5 years back now. And Atlanta, I've been like in the Texas market, bought with my team and my partner 24 properties, multifamily, because that's what I'm really good at. And then I wanted to move to Atlanta. I mean, get my business and start buying over there. So I prepared my PowerPoint presentation. I did a lot of research, by the way. Literally, I had this stack full of reports in my iPad Dropbox. And when I went to Atlanta for 4 days, that's when I met with the cheeses, I call them. They are the brokers, the top brokers in the market who are selling multifamily, right? So that's the secret sauce. I spent 4 days, and that gave me 92 deals. 92 deals, and we underwrote almost 55 or some deals, underwriting very extensively, which we have the calculators and we have designed and all. But then I did best and final for four. I'm just gonna sharing because Success doesn't come overnight. That's what I want to tell everybody, and I was turned down in all 4 deals. I couldn't get to the top. I was number two in one, two in two, I think, number three in another one. Then the seller wanted people locally. I live near San Francisco. So that just didn't work, right? There now, never give up. Never give up. That is the key. I kept on texting my broker contacts from all the top ones. The Browns realtor advisors are the best over there, and Cushmans and others, and all the great ones, ARAs. I don't want to put anybody down, Marcus and Transvest, all of them are fabulous people. But I really, joined hands with them, and they started giving me deals. So I bought a deal actually in 2016 December. Hold on, it took like 5 6 months, but then we got something locked in. When I went there, I bought that deal. We were doing the 267 units, and we were doing due diligence. Same broker said, Vinny, do you have 15 minutes? I said, I do. I was standing in the parking lot. He says, get in my truck. And he took me to this deal that I sold yesterday. That's the reason I'm telling you the little story. I saw the deal literally, Beau, and I said, I'm going to buy it just in 1 hour. I looked at the townhouses, the brick townhouses. Nobody lives upstairs, over 90, 190 townhouses, community over 26 acres of land or something, brand new elementary school opening in the back and everything, right? So I did research so good that I knew that if I bought it in 2017, it's going to go somewhere, because this area of Atlanta was the emerging market, right? And which is what we go for, right? Jobs, jobs, and jobs. So that's what I did. I bought it for 12 million 224. I got three offers before COVID happened last February. This is 1 year back now. Three offers for 19 million three, 19 million five, 19 million eight, something like that. You know, three in the same week when we did the open house. But then COVID happened, and so forth and all that. So, make long story short, we just closed the deal for 18,750,000. And why did we do that? We gave $300,000, discount due to COVID, so as a win-win-win situation, right? We wanted to make sure that the buyer and the seller, I'm the seller, the buyer, they're feeling comfortable. Then repair allowances, they wanted more money. I gave that also, right? So all those things, we have to do those things to make the deal work, right? But overall, we came out really well. From my investors are going to make ton of money, and we are returning the principal back, and then 55 or 60% growth, equity gain on their money. Hold on. So they gave me that money. They got cash flows all these 5 years, right? For 4 years, 4 years. And yeah, 17 to 21 now, 4 years. And then they're going to get this bumper, equity gain, right? Which will be given. So that's a win-win situation.
So Vinny, so essentially when we're figuring out returns for investors, from a high level, we're going to take all their cash flows, their distributions they got, and then their equity bump at the end.
Exactly.
Right. And then basically essentially divide by the term, and
Exactly.
and you're going to get, essentially you're going to get their returns, right? So,
Yeah,
they're
in 4 years, it might be 80%, 90, or even 100%. So that's like average of 20 to 25%. We have not put the pencils to it, but we'll be doing now, reconciling the accounts and all that. You're right. Yes.
right. So it's very strong returns, and it's a win-win. What I noticed about you is that you're always looking at different markets, and what you've done really well is you're really a component. You're finding emerging markets, like you said. Oh, lots happening in Atlanta. We got the movie industry. We got all this happening, and you go in and you just strike, right?
Yeah.
And it's like boom, and then you had rapid growth, and then you make a great return and you get out, right? You're not a long-term investor. You're like a 3 to 6 year type investor, because your model really returns more for investors, really. Like it's all about just taking the
Turning
money,
the money. I
turning
call
the
it
money.
turning the money.
We
Yeah.
call that the velocity of money, right?
Philosophy. Yep.
And so it's a really good model for passive investors because that they really don't want to be stuck in a deal for 10 or 15 years. They want to be in and out and get the highest returns, right? Like everybody. So you've done that really well in the Georgia market. And
Then
at
we
first
went
you
to
in
Florida,
Texas,
right?
yeah,
Like,
Texas. Then you
yeah.
went to Florida. Florida
Yeah.
blew up. And
Yeah.
then you got another three,
Now
four,
we are back to Texas again in Austin.
right. And then you went to Austin, and then Austin Austin was doing really well. And then it just like when you bought, all of a sudden so you really kind of, it's really about kind of timing and getting in on those trends when there's already traction of growth and you already see it going, but it's not peaked yet, right? So you're getting in and then you're riding the peak, operating the property in a better manner, reducing costs, increasing rents, and then turning the properties over, leaving a little skin on the meat on the bone for the next buyer. You guys make the money and come back out. So that's a great model because you're turning the money quick.
Oh, thank you. Thank you, Bo. You're so right about it. My Siena Villa property or my other properties in Texas, I bought 10 south of Houston, bought 7 around San Antonio, bought 6, I think, or something. I've done like 34 syndications so far. That means we have purchased that or we are building some now, assisted senior living. But you're right. My main thinking is how can I put velocity to the investors' money so that they could make money and then do cost segregations and everything, save them on taxes, and then bring the money back again. To save money back again, Vinny, as an engineer, is always thinking about. So I just launched my $50 million fund yesterday morning, and I got 1.5 million committed in it already just within hours yesterday. And I have 4 meetings today with my top investors who want to put half a million to a million in this fund because we are giving very high return. It's a 506C. Aha. So I can talk about it now. It's the one where I can advertise. We'll have a website. We can share the returns with our audience. Everybody who wants to know about it, please just email Vinney@VinneyChopra.com. So Vinney at Vinney Chopra, it goes to John and my desk right away. And, as you know, John Rusin is amazing partner and my vice president of the company, and so forth of the academy where we are doing a lot of things.
So let's unpack this a little bit. This fund is going to invest in financing construction loans. Is it also going to invest in any other asset class or just strictly kind of debt on construction?
No, it's going to be actually 5 different things, John, Bo. Maybe tell me a little bit more about you, and I'm going to open up this document, and then I'll share the screen with you.
Okay, very good.
Tell me more about your loans, and I know
Yeah.
you're doing so many applications. So take me there, and I'm going to come back.
This is going to be great. Everybody that's watching, because I was telling Vinny to do this a while ago, so I'm excited for him because really it's a great way to give limited partners, LPs, good returns. They can, a lot of investors, passive investors, like the shorter term deals. They like to get in, get out, get in, get out, get in, get out. They don't want to be in long-term deals. So I always talk to Vinny about this, and now he's actually doing it. So I'm very excited to hear this as he's going to do the presentation. But from a lending standpoint, I'm on the debt side, and I also do C-PACE financing. So we go in the capital stack on construction projects. Lately, I've been getting a lot of requests for hotel financing. So, I got one gentleman that's converting an office building into a hotel, which is going to be a fun project. So you're seeing a lot of adaptive reuse of properties that aren't, they're not basically cash flowing where they need to be, and there's a higher and better use of the property. This is by an airport, so there's a lot of travelers. And a lot of the hotel owners I'm talking to now are they had a slight dip during COVID. Obviously, maybe some of them more than a slight dip, but there's actually more and more capital coming for hotels right now. And I'm doing a lot of SBA financing. SBA is still strong in the hotel and the hospitality. We're doing construction loans of all sorts for mostly multifamily, hospitality. Student housing, even with COVID, there's just some demand for student housing. So as the vaccinations come through, banks are starting to open up again, which is great. But kind of going in this model is that there's a lot of private debt funds, and so all the transactions Vinney's doing, it made sense to set up a new fund, and I'm excited to kind of dive into it. And Vinney, you let me know when you have. I'll
Okay,
keep.
buddy. Yeah, I'm almost there.
Yeah.
I wanted to share. Maybe John, if you're listening to me, could you send me oh wow, we just sent to 400 of our investors yesterday, the login, and then I mean the MailChimp, which we use, by the way. But I'm going to share with you all, this is how I do it, the whole business. And I would be the first one to share all my tricks of the trade. So there we are. So I'm going to go right here, and please look at my email. This is what I did, by the way, just to let you all know. You know, uh, Great news. We are closed, dear investors. Just apartment closed just 2 minutes back. Good news, dear investors. The sale of this. We are awaiting the wire of the proceeds. We will return $4 million initial investment right away to respective investors through bill pay. We use, bill pay right there. My daughter, my wife, Kanchan, already bill paid it. $4 million is going to go out today back to the investors. We'll request checks as soon as, which we did already. Then in about 7 to 10 days, we will clear up all the outstanding bills and reconcile all the books, determine the equity gains, which we already know right now, but we'll finalize it. And it was definitely a very, trial closing, 7 months, by the way, Beau. So it's good to have operators who stay the course, right? It took us a lot of hard work, to come to this one. Thanks for your trust and confidence in all of our professional teams, and then, my name and everything like that.
And
So,
speak of that, Vinney, I think an important thing is that, people that aren't operating real estate businesses, they don't understand that real estate's it's not all peachy, right? Like you got it, like it takes a lot of work to get to the end. It's not
oh,
like,
yes.
I mean, Vinny's always happy, and he's a great way of, he's considering how much, deals he's doing and stress he has, but it's not like this easy process, right? Like there's buyers are coming doing due diligence. You're having to update all your reports. You have to appease them. You have to, negotiate back and forth on different things too. So it's always an exciting day. And I can't wait to the day that I get these big wires into my bank, my company's bank account from a sale of a property. That must be exciting feeling. I mean,
We got $8 million yesterday, I think, or something. $8 million from the closing of the sale. We bought the property, Bo, for 12,224. Listen to this one. That was the purchase price of the property, right? So we even paid a prepayment penalty of $1.6 million, by the way. So this 8 million is after paying Freddie Mac 1.6 million. Hold on. So that is already taken out of my profit and investors' profit. And we knew it because it was a 10-year loan, and we closed the loan within 3 years or something. But treasuries went up, which really helped us out, by the way. The penalty was 2.1 million, which we had to give from our profits, right? But it reduced down to 1.6 million.
yeah, it's funny. It's funny, Vinny. It's like people just got to realize, like that seems like overwhelming. Like 1.6 million. I have I'm talking to somebody right now. They have they have a lot of equity in a multifamily property, and it's like they can pull out $6 million. And I said, you can pull out $6 million. This property is still cash flowing. You can, put back all the capital you have, and then have $3 million of basically free money, right? Because you did a great job on finding and operating this multifamily, and they have like $150,000 prepay. I said, really, in the scheme of things, what
Yes,
can you do with that $6 million, right? Like it,
yes,
and
yes, yes.
it's amazing. But
No,
so
I'm so glad you said that, Bo. And that's what we want to share with everybody. Every week, we'll be coming out with lots of great things, and Bo is going to share his screen and, share with you how to really crush it in base financing and HUD and, loans and bridge loans, and he can share the term sheets, whatever is available, right? And we can teach you guys. So please like us, share our videos with your friends, and, put the notification on. Go ahead and subscribe to the channel. That's what I wanted to mention. Beau's channel and my channel. Please subscribe, because we are putting so much good free information for you. Beau, you asked me, buddy, what are we going to buy in the fund? So please, let's look at it. Yeah.
Okay.
So time is of the essence. So please look into the return tables, which I'll show you, because it's a 506C fund. I can
Okay.
do it legally through SEC ruling. And right here below, and make the commitment today. We do it, and we are already getting a lot more people
So
putting
yeah,
money.
that's great. So this is open to advertise, but is this
It
still an
is.
accredited investors or
It is only accredited investors
okay?
only. Yes,
So you're gonna be
verifiable,
you
verifiable accredited investors. Yes,
in this fund, you're gonna be looking at B class multifamily and emerging markets,
yes,
stabilized senior assisted living and memory care communities, financing the construction of our already approved and vetted ground up senior assisted living communities.
yes,
As the market improves and the hospitality arena comes in, you're going to start looking at mid-tier name brand flag hotels, well-researched and discounted priced hotels. Also,
yes,
you're going to be looking at doing opportunity zone, ground
yeah.
up multifamily construction to get huge tax benefits with, so you can, so even your LP investors, I'm not an expert in opportunity zones, but
Yes.
your LP investors on those OZ deals, they can roll their capital gains into losses essentially through the OZs, right?
So true. I mean, I just learned so much, and we would love to even bring our, Stephen on the line. And he shared with me, said, Vinny, in the stock market, if somebody made 500,000 or $1 million net gain, they don't have to pay a dime. I'm not a CPA, by the way. I want to say that right now. But you could put that money into opportunity zone and never have to pay taxes. It's amazing. Even when the Silicon Valley, we live near to Silicon Valley, all of you know, right? So a lot of people sell their stocks because stocks went way up, right? In any of your company. And if you make that gain, you don't have to pay taxes in if you uh, uh, put it into opportunity zone. And we do have now 16 acres plus 5.6 acres. So 21 acres of land we have bought in Michigan. Shahid, my partner, he owns 16 and I own 5.8 or something. So we are building 155 or 157 luxury, total luxury, gated multifamily community, townhouses and apartment complex, right? So we have great opportunities. If anybody would like to talk to us, please email Vinney@vinneychopra.com. That's the website also. I know Beau will go ahead and put your website also, buddy. We're going to do some banners so that, people can reach us, right? And in the comments, we could go back and put all those things. I do want to say, like, we do soft commitment. Click here for soft commit. If you go, it goes into a sheet, a form. Then in real time, we get the commitments in Google Sheet. So it's a very good way to do it. And these are the returns, by the way. I don't know if we could go a little bit larger screen here. I
So
don't
we
know.
we could talk about it high level.
Yeah,
Is this
yeah,
going to be
yeah,
kind of like just like
yeah.
a preferred return because
Yeah, what we
it's
do is
debt?
like preferred
Yeah.
return in the first year, second year to 10 years. And this is preferred return, which is paid out quarterly right there for 100,000 investor. And then equity gain, targeted gain returns are also preferred. Other words, we will not make any money, general partners, unless we deliver to our limited partners. That's how I believe in. I want to make sure that they have the best of the best, right? That's how the businesses are built. So 100,000, then 200,000, it's higher returns, 2x, 3x. Look at that, 2.10x or 1.7x right there. Then at 500, it's almost 2. Again 3x, I read it here. And then a million also. So some people are already talking to us to put $1 million in this diversified fund, so that they can make almost like 15% per year. Even in the stock market, over 30 years or 20 years, you make 8.5% or 9.2
So
somebody.
Vinny, let's kind of unpack that for a second.
Yeah.
There's five asset classes that this fund's going to invest in.
Yes.
So if a limited partner invests in this fund, it's almost like I hate to use the word mutual fund, but essentially you're getting the best of the worlds, because you're getting some of those will
Full
outperform, some of
diversification.
them will perform better than others, but you're
Correct.
blended, right? Like you're
Yes.
basically,
Yes, exactly. No,
so you're going to get the returns, a blended return based on those asset classes. So you're
Yeah.
diversified. You're not just investing in one apartment building, or you're not
No.
investing in one loan. Your money's getting in there, like kind of like what a mutual fund does, essentially like 5 or 6 different stocks, and you invest and you get a piece of all the, upside of
Everything.
that. Yeah. So that's good. So it's a good way to diversify, right? And it's a good, good mix. And then it's
Thank you.
interesting then.
Thank you, John. And I mean,
Yeah.
thank you, Beau and John, also in the background. Again, our main idea is to, which you always mentioned it, Beau. I want to thank you, because this is the best way to do it, because this way we are able to diversify. And I've been doing 36 deals or whatever, 34 deals specific to one property. When the property goes up or down, the returns go up and down, right? But having a blended like this one, like you said, it just makes a much better sense, because one might be a little bit low in one quarter, but the other one might be way high. So the investors can, be really assured that they will get their money, right? In the returns. And then it's 5 to 7 year hold. But even after third year, we are keeping it open, looking at the fund's position. Even our investors can take money out after third year. Some of them, hopefully not everybody will do it, but we'll have to see the liquidity. But that's a good way. And we gave projections for 10 years. We would love for people to keep the money, for 10 years if they want to, and be totally carefree, literally. I mean, how many people will not like to get, $1 million and then get like, 8% each year in the cash flows? And when they take the money out, like let's say in 5 years, right, John? I mean, Beau. So essentially, they'll take their million back in 5 years, plus, 7%, right? It's 7 plus 8 is 15. Yeah. So 7 times 5 is 35%. So we'll give their million back, plus we'll give 350,000 more, right? That's how it is. That's what it goes here. We get it.
Are they going to get a quarterly distribution in theory,
Yes.
or? Yeah.
Yes. Quarterly distribution.
So they're
Exactly.
getting their quarterly distribution, and at the end, there's going to be some equity kicker on it.
Equity kicker.
Okay,
And
got
it's
it.
based on 7% each year. The longer they keep it with us, the higher the equity kicker, right? Because if they kept it for 10 years, then they will get $1 million back plus 700,000. Aha. So they would have made almost like 8 times 80, 800,000 they would have made in cash flow, right? In 10 years, plus they get 700 equity gain, we call it, right? Right there. So their 1 million in 10 years will give them 1.5 million. That's why we say the equity multiple of, it should be 1.5, John. We should look at it. In 10 years, this should be 1.5. It says 1.4 or something. Anyway, because see, we are giving 1.5 plus the million, so total is 2.5. Anyway, so that will be the one, right? Yeah, yeah. So let's come back, huh? Let's come back. Again, guys, we do it for about half an hour or so show, and hope you liked it. Beau, what would you like to add a little bit more, buddy? Yeah, sorry.
Oh, that was great. I'm always interested. You learn a lot, like different people's investors and syndicators, their models, and it's always fascinating how people structure. And at the end of the day, the key for raising money, it seems like from learning from you, is do a good job for your investors, and they'll keep coming back, and it helps grow this big commercial empire, right, of real estate. Like if you if you do what you say, or actually under promise and over deliver, right? Or right. And so that's the real key of, the number one thing, what I've learned from many people that are successful is number one goal is protect your investors' capital, right?
Yes.
And number two is, equity gain and cash flow. And that makes happy investors. And when you do a good job for them, they come back and back and back and back. And that's essentially what syndicators do, right?
So
Good syndicators.
totally. And it's like the effect of leverage, right? The banks are partners in the commercial buildings we buy. So banks are giving us 80% of the loan or 70% of the total value of the loan. So our investors, 1 million or 500 or 100,000, will be leveraged. Other words, if they only invested 100,000, then just go, that is 20%, then 5 times that money the bank is going to give us loan to buy the pet. So the leverage returns will be much, much better returns than if we just put that 100,000 into the stock market. That's how we could give 12%, 14%, 15% and still makes a little bit profit for us. But the key thing is it's a win-win-win-win game, right? And this way our passive investors, attorneys, lawyers, CPAs, I mean, our base has gone from one investor to almost 400. Oh, by the way, I forgot. I'm going to die otherwise. I want to share a screen again one more time, because what we did was we put together a symposium over the weekend. And I don't know if this is this. Oh boy, come on, Vinod. Actually, Luke Wren, I want to talk about
sit up
little
tall to manage your state as you would over the next 2 days. Because see, I've been blessed in my lifetime to come across some incredible mentors, some incredible peers, have some incredible coaches. As Vinney said, I get to run the life and wealth mastery and business mastery programs for Tony Robbins.
Tony Robbins.
I remember as a kid, I have this here, some of you won't know what this is. This here is what we call a Walkman, right? This is a cassette player. I had to find this one on Amazon. See, we didn't used to just hit a button on our phone and play music. We had to put a little cassette in this thing. And what I want to share with all of you is a little story to start out with. How did I end up with you here today? I was blessed that at 17 years old, I grew up rich in love, but poor in money. I had a dirt floor in the basement. I had a train tracks in the backyard. And at 17, how many of you know what a garage sale is? At 17, I come across a program that was wrapped in plastic. Nobody had even opened it, called Personal Power. These are the original cassettes. I had loaned my originals out to somebody. They didn't return them. So my friend found this one online and got it back to me because of the sentimental value of why I bring this up. Self-education, growing, learning, self-growth, being open to programming new things in a new world. Sometimes we can get caught in, when is it going to get back to normal right now? Over the last 18 months, who's heard people say, when can we get back to normal? This is the new normal. This is the new norm. The way you're learning today is what you want to step into, lean into. And I want to challenge all of you. Who's up for a challenge? Please light up the chat if you're up for a challenge. Who's up for a challenge today? Who's up for a challenge tomorrow? And every day there forward, I challenge you to be flexible and open. I challenge you to be flexible and open. Put some comments in the chat. Raise your hand in the chat. Be active in the chat. I'm not asking you to be active in the chat.
My friend Luke
the world's
was
shutting
so
down the last 18
ironical
months.
in the
Who would
keynote
agree with me? Let me
speaking.
know in the chat if you think the world is changing faster than ever.
It's amazing.
If you believe that the world,
just
the
this
technology
video. It's amazing.
Oh, underline that.
Hit
1 hour.
About that.
1 hour.
Who might I need to reach out to?
And
get in
then of
contact
course,
with? Because this is the starting line. Everybody write this down.
You got it.
This is the starting line.
Close this up.
Not the finish line. See, all too often I see people come to
So
an
we
event
just
around the world and they
started.
go, oh, I'm at Tony Robbins Wealth Mastery. Oh, I'm at Tony.
Right?
There you go.
So
Yep.
the thing is, I would love to share with our audiences beautiful, beautiful clips. And we just did the Passive Wealth Symposium over last weekend, right? Beau, The caliber of investors was amazing. 1,095 people registered. 1,095. And they were just 3 weeks back, we started promoting it. We should have done it quicker, right? But anyway, the key thing is that we can all grow and we can really understand what it takes to invest wisely. So if anybody listening to me and listening to Beau would like to find out, we are putting all the videos of the 2 days. People were going over time, literally asking so many question answers. So we are putting them in a library for a very small investment. You'll be able to watch all of the whole 2 days right there, evergreen. And you can come back and watch it again and again. And there is question answer session with the attorneys, with the CPAs, with the core solutions, with the cost segregations, people with the, I mean, it was one of the best of the best, really. And a lot of people who are commenting it, they say, Vinney and team, you were able to bring even people who are doing storage units, or people who were doing mobile home parks. Raphael, he's number 6 in the nation. He also came, and every presenter gave their best out. It was really amazing. Yeah, thank
That's
you.
awesome. I'm gonna have to hit you up for some
Yeah,
of those.
thank you. Yeah. Oh no, we'll give you VIP pass.
All right, there you
You're on the
go.
top of the list, man. You're on the top of the list.
Very
Totally.
good. Well, I'm glad we're starting to use Zoom. I think it's more flexible, easier to
Yes.
share screens and stuff. And we just got to figure out how to syndicate these out to our channels. Obviously, we
Yes.
make these into our
Exactly.
podcasts and videos, but people we got to
You're
figure
a
out how.
marketing brain. Well, I'm going to let you do it, but I know I've learned so much from you. I want to really thank you for being a partner with me, and we are going places, and I know we're going to be even traveling to bigger places in this decade and 20 years coming up. And I know it's going to be fantastic. So please, thank you everybody for watching. Remember, put the comments down below and interact with us, and we'll put Beau's information for loans and everything about it. Please reach out to him. And for syndication or investing, please reach out to us, Vinney at vinneychopra.com, and we'll put the websites, the LinkedIn pages, and all that. Right, Beau, buddy? Huh?
All right. Thanks everyone for watching. This was
Thank
great.
you so much, guys. Thank you so much. God bless you. We'll end the recording now. We'll see you next week, 9:30 Pacific, 9:30 Pacific, 12:30 Eastern, every Friday, Vinney and Beau Show. And I don't know if we have the outro, but love to play the outro. John, buddy, can we play the outro somewhere? I don't know where it is. I thought I put it up there somewhere, but
We
anyway,
can always edit it and put it on our.
Yeah. Oh, there it is right there. Okay, perfect. And we go. Let's see. Even though. All right. We